Hey everybody, Josh Sigurdson, World Alternative Media here, and we are joined once again by David Morgan of the Morgan Report, and we've talked with him many times, one of our favorite guests here at WHAM. Our audience definitely loves to hear his insight, and I wanted to go into a few issues with you today, Mr. Morgan, but first, thank you for joining us.
Oh, my pleasure. Thank you.
Now, later on, we'll talk a little bit about the Red Pill Expo, which everyone could check a link for below, which David will be at alongside us here at WHAM. But we'll get into that later. Just make sure to check that link below and check out this event. It's only a few weeks away. But first, I wanted to get into the issue of silver, of course, which our audience is always interested in. And there have been a lot of questions regarding whether we're entering a bull market or a sustained bear market, what's going on. And I wanted to ask, what do you think when you see news headlines? I see a lot of them, like this one out of thestreet.com that says, "Can silver prices recover from total destruction?" We've all seen such headlines in recent years. What do you think when you see these kinds of headlines all over mainstream media?
Well, I think, everyone, silver is probably the most unloved and most chided, hated investment over the last several years because it's probably the worst performing asset. And if you go back from, 2000 to 2010, gold had an 11-year run from 2000 to 2011. Every year over year, it was at a higher price. Silver was similar, and a few years silver was the best performing commodity out of this commodity index. And I'm just giving you a little background that all
Mhm.
markets move up and down, but since that peak of the end of April 2011 till now, it's just been basically downhill, sideways, and downhill. So very few people, and I kind of laughed slightly, Josh, that you said our people are interested in silver. It's like, well, maybe two or three of them. I mean, almost no one's interested in silver, it seems. But yes, it can recover. I mean, I was in the first bull market. I watched silver go from the monetary value of $1.29 per ounce all the way up to about $6 from 1965 to 2000 to 1979.
Mhm.
So 65, 75 was 10 years and 4 more years. So 14 years, it went from a buck 29 all the way up to six. And on a real inflation adjusted basis, you'd made some gains. Then I also watched it go from January of 1979 to January of 1980 from $6 to $50. And
Mhm.
that's where I, thought about this idea that I'd heard from Jeff Christian that 90% of the move comes in the last 10% of the time. And will that mean that it happens again? The answer is no, we don't know. But what we do know is that all markets, real estate, the stock market, tech, rec, Bitcoin, whatever, they get this acceleration phase at the last, basically, usually the last leg up. And we haven't had the last leg up in silver. So can it recover? And the answer is yes. So I'm going to digress a bit, Josh, and I know you're
Mhm.
good at, letting me talk. But if we go back to that market, so you went from 6 to 50 and then it crashed. Silver basically did nothing for 20 years. It basically based around the $5 level. And the only thing that got silver off the mat was that Buffett bought it. And when Buffett bought 130 million ounces of silver, it popped up from like the $5 level up to 850, but it quickly came back down
Mhm.
to that level. So can it recover? The answer is yes. Will it recover? The answer is yes. When will it recover? I don't know. Uh, and I've got some views on that. So, but what does it make me think? It makes me think that it's very reflective of reality.
Mhm.
People, especially, it seems that a lot of precious metals people, although I've tried my best to explain it's a hedge position, most people are satisfied with a 10% position. Take that other 90% and, be a real estate investor, be a stock investor, be a cryptocurrency investor. Don't, but some people, in fact, it's my experience, very many of them hear the precious metal story and it's so compelling, and it's so compelling that fiat always fails, that they overload. They don't buy over time. They put it all in at one day, and then all of a sudden they expect the next day that's going to start going upward for them. And when they find out
Yeah.
the markets go up and down, it goes sideways for a while and further down from where they bought, they're very upset. But if you do it right, you buy the right amount, or you do it over time and just constantly stack, you're in much better frame of mind than you are if you overload.
Yeah, it's often been said that owning only silver or only gold is almost as bad as owning no silver or no gold, because
Well,
absolutely, you need to diversify. And I wanted to ask a little bit about something that seems to be kind of bullish in the fact that we are seeing the silver gold ratio at a 26-year high. And it is an indicator, it has been an indicator throughout history. Can you go a bit into what the silver gold ratio means for future price action?
well, this is a very controversial subject in the silver gold world, and there's a lot of people in the industry or in the metals at a fairly significant level that just basically poo-poo the whole idea of the gold silver ratio. I'm not one of them.
Mm-hmm.
But it goes like this. Long story, again, I'll build you a watch. But if you go from the 13th century to present day, and you put a big roll of paper out up on the wall and measured out in feet, that every foot was 100 years. So you go from the 13th century to the 14th century to the 15th century to the 16th century to the 17th century. The gold silver ratio at the time was 12 to 1. So that's a lot of feet. And then during the big banking crisis in England, Isaac Newton put them back in a gold standard. And that's why he was knighted as Sir Isaac Newton. Wasn't his Newtonian physics, because he got the Bank of England straightened out. So they knighted him. And then they said, well, you put us back on a gold standard, what's silver worth? And he looked out the window. That's a metaphor. He just basically looked at what was trading at the street and said, well, it's 15.5 to 1. Wrong move, Mr. Newton. Even David Morgan's smarter than you on money. Sorry, just throwing that in there for humor. But you should let the market determine on a daily basis what the ratio is, not fix it. Mm-hmm. But nonetheless, he did. And that's what I call the classic or monetary ratio. So from the 1700s, approximately, 1800s, 1900s, 2000s, it never went above 16 to 1 until you get to the last foot and a half of that chart. And then it's been up to 100 to 1, I think 3 times now. And now we're, as you know, 88, and that was your question. Mm-hmm. And usually, if you look at the chart, it's a spike. So in other words, it goes up to that 100 level, and then it's there very briefly in time, and then it starts back down. So if we look at past history, it indicates that we're most likely at a level that maybe we'll get to 90, 92, 93. I don't know. The market knows. But we're pretty close, I would expect, to where it starts back down the other direction.
Yeah. Now, I have to ask, is it possible to see a supply of silver lag behind demand? Is a silver deficit a possibility, as many have claimed? Because there seems to be a lot of chatter about this potentially happening in the next several years, especially with the use of something like silver in so many electronics and a lot of the green energy initiatives that are coming up alongside copper as well. And with there's a copper deficit to some degree as well happening over the next little while. And a lot of people are saying that we could be seeing the same thing in silver. And from my perspective, it's always been, scarcity plus demand equals greater value. I'd like to hear your thoughts on something like this.
That's another long answer. You're really testing my knowledge today, Josh. All right, here's the story. Present day. I'm just going to go brief history. Mm-hmm. So from 1990 to 2006, so 16 consecutive years, the silver above ground stockpile went from the base amount of 1990 of 2 billion ounces and was drawn down at an average rate of 100 million ounces per year for 16 years. It got down to 500 million ounces in 2006. So in other words, from 1990 to 2006, we ate 1.5 billion ounces from what was hoarded above ground. Deficit. Mm-hmm. From 2006 to present day, that above ground supply has gone from 500 million ounces to 2.5 billion ounces. So we have more above ground silver today than we had in 1990. And this is a factor that very few people seem to have grasped. I did a free webinar. You can go to my website, themorganreport.com, give me a first name and an email address and get access to all the stuff we do. It's on my YouTube channel, but I did a webinar for free called, Is There a Silver Shortage? And it depends how you define the word shortage. I'm sorry for my sick humor. It's like the Bill Clinton thing. Well, it depends what is, you know? Well, it depends what shortage means. Because if you look at the basic facts that I just outlined, the above ground silver supply is much bigger than it was, 15 years ago. So there is no real deficit for the way I measure it, which I just outlined. Now, if you look at the World Silver Survey, you'll see deficit in almost every issue. And what they're saying is that there is a demand on investment that's greater than the above ground, than the mining supply, which would be true. I mean, I'm not going to argue with their numbers, but what I am arguing is that it depends what is. The facts are that there's a lot of silver that's being refined right now that has no actual demand on it. So it's put out at the spot price where the market's determined right now, manipulated or not, it is the price. We cannot argue about the manipulation. And of course, there is manipulation. It's in my book. We talk about it. I really don't care to, but we could. But regardless, it's that price and it gets shelved. It gets put in a warehouse at that spot price and it sits there and collects dust. Now, there's another part of your question that's actually more important or as important, and I'll go through that. So first of all, let me stop there and make sure that I was articulate and clear about what I just said. Was it clear to you?
Yeah, absolutely.
Okay. Now let's talk about the industrial side. This is rather fascinating to me because silver's a monetary metal still, at least in my view. Legally, it's money. I can't, that's a fact. Anyone can tell me it's not money. They can have their opinion, but legally it is. So end of statement, end of debate. But back on the industrial side. So if you go back to 2000-ish, early 2000s, the total mine supply at the time was roughly 550 million ounces a year. Now it's about 850 million ounces a year. Therefore, the above ground stockpile I just outlined. However, in 2000, the demand for industry on silver was about 35% of the total market. So 35% of 550 million ounces. Today, it's 60% of 850 million ounces. So that gives you a taste for how much industrial demand has grown over the last 20 years. Substantially. And it's primarily, well, it's not just solar, but solar is obviously one of the most significant. Mm-hmm. Now, let's just do a little thought experiment. Let's just pretend for a moment that the silver supply was 550 million ounces a year and it didn't grow. And the industrial demand did grow. So 60% of 850 is 510 million ounces. So if there was no increase in silver supply, which there wasn't for 20 years, basically, from the time that silver crashed in 1981 to about 2000, there really was a flat, not only flat price, but flat inventory. In other words, there wasn't a whole lot of new mining coming out. It was basically static, flat. Anyway, here's my point. If they had a level silver supply over the last 20 years instead of an increase, 60% of 850 million ounces is 510. So if you use my number, I hope you're following these numbers. I love numbers, as you know. Mm-hmm. 510 is almost the entire silver supply mined available back in the early 2000s. So basically, if you had a flat curve, you would have industry eating up all of the silver for practical purposes, give or take a little bit. Obviously not the case. The supply's gone up 300 billion ounces on an annual basis over the last several years from 2006 on. But what I want to point out is that industry is eating more of the supply. So if you have a situation where the monetary demand comes back due to a lower stock market and bond market, both the equity market and the bond market not yielding what investors want, and they're taking losses in both bonds and stocks, there's really not a lot of places to go. You go to cryptos, but the big run will be to gold. Mm-hmm. And when the run to gold starts, it's going to carry over into the silver market. And it's such a small market that it could definitely move that ratio from 88 to 1 to 44 to 1 to 22 to 1. Who knows?
Mm-hmm.
But I definitely still believe that the last leg up, like I outlined in 1979, that $6 silver goes to 50 in a year. It could go from 15 to 225. Who knows? I mean, I'm not saying it's going to 225. I'm just trying to give the idea. If you told anybody in January 1979 that silver would be $50 a year out, they'd say you're absolutely, totally 100% out of your mind. And almost anybody would have laid odds in Vegas and taken that bet, and they would have lost. So, being the silver aficionado that I am, I know one thing, and I learned this very early in my commodity trading days, and that is nothing moves like silver or soybeans. So once it starts to move, look out. It could be a bigger move than most people expect.
Yeah, and we've seen throughout history even the effects of spoofing supply in the case of something like diamonds, and it's a possibility as well. I wanted to ask, because I know you mentioned you don't really care to talk about the manipulation, and that's fair. You can. You don't care to talk about it, that's fine. But I wanted to talk about something different, because we've talked a lot about manipulation before, but what the effects are following that manipulation. For example, for decades, banks have heavily manipulated and spoofed silver markets alongside gold and whatever other markets they can get their hands on. But what happens to silver and gold when the banks collapse, as the inevitability have to, and silver can no longer be spoofed by these massive financial entities? Because we see the cash to deposit ratio on a lot of these banks, as far as the balance sheet goes. We see that a lot of them, some of the major banks, are only carrying 1% or less of deposits in cash. It's alarming, to say the least. I don't think even most bankers are aware of that. And with that said, with the level of manipulation you see from banks like Deutsche Bank and other banks, when they go down, and inevitably they will, what happens to the gold and the silver that they've been manipulating for so long? Do we see like a beach ball effect, where you hold a beach ball underwater for a certain amount of time and it gains pressure, and once you let go it bounces up? Or will it be minimal? What do you think?
Well, I'm going to qualify this by my opinion. It's a studied one, and I've certainly thought about it probably as much as most people on the planet, but doesn't mean I'm right. I think, first of all, there will be no default on the commodities, the CME, the Commodities Mercantile Exchange, and the reason being is the way they define it. Going back to what is, because the way that it's structured is that they are allowed to settle in cash. So you could have a silver contract demand delivery, and all of a sudden get a big fat check from the CME and saying, sorry, you don't get silver, you get this fiat. And I don't want fiat, I want silver. Well, read your contract, you signed it, and there's your answer. So Let's get that clear. I think, Josh, and again, I put some thought in this, I think for a while, and I don't know how long, a week, a month, probably it won't be 6 months. There could be, I say could, not would, bifurcated market where you have a paper silver price and a paper gold price and a physical gold and silver price. So for an example, you might have silver at, let's make up a number, $50 in the physical market. If you go down to your coin dealer or Kitco or a big online dealer or whatever, it's $50. But if you look at the futures markets, they're still trading their contracts or pieces of paper at 40, as a rough example. I'm making a big discrepancy between the two prices to make my point. That won't last long. What could happen, and most likely would happen, is that the paper paradigm would just be destroyed. And now you go to what I've always argued for, and that's a cash-only market. You have silver coming out of this mine, you sell it for what the going rate is on that day or that month, or if you think it's undervalued, you hoard it for a while if you can afford to do so, and then you sell it into the market. The futures market, I have nothing against it in theory. In fact, I think it was actually a good idea to be able for a farmer to hedge his wheat crop or corn or whatever. But it's been manipulated, it's gotten out of control, and it doesn't serve the function it was designed to do, and it hasn't done so for a very, very, very long time. And there's ways to correct it, but the authorities seem to be more like, I can't remember his first name, but Bastier in the book, The Law. I mean, these guys keep changing the laws to suit them, and where all this corruption comes, they're doing it legally, quote unquote. It's not moral, it's not right, it's totally wrong, and yet it's to their advantage and not to the advantage of the market. I mean, right now, most silver producers are producing silver at a price under what they could sell it, excuse me, over. Am I saying that right? I'm sorry, a little while.
Yeah.
It costs them more to get silver out of the ground than what they could sell it for.
Yeah.
In most cases, not all, but most. So you make it up in volume. I mean, basically, a lot of these mines have said, "Well, David, why didn't they shut down?" And there's a long answer to that. But normally, it took me a while to learn this. I didn't know right away because common sense is, well, you're losing money, shut down. Well, there's usually contracts, and if you shut down, you got to pay 6 months' wages to the workers, and then it's really tough, especially in a mining operation, to shut it down. You can make it minimal. You can have no overtime. Make it a 4-day work week, but shutting a mine is very expensive in a lot of ways. So most operators are smart, really, believe it or not, to run at a loss and take as small a loss as possible, keep it open, than to shut it down for a while. But if it lasts too long, the market's going to make the decision for you. We can't lose money forever. We're running out of cash. We can't raise any more funds. We got to shut down. So we're not at that point yet in a lot of the primary silver producers, but it's hurting them pretty badly. So with the ratio where it's at, the amount of sentiment out there that almost everyone hates the metal now, there's very little interest in it. We're probably pretty close to the bottom. But I must admit, I've been very good at getting the tops correct, but I haven't been that great at getting the bottoms correct. I've been good trading because the Morgan report, we do more than silver. And, I let the market tell me when to get in and get out. So as far as making money in the market, I could still do that during these trying times. But for the vast majority that just listen to me and never subscribe, they have no idea about that. And all they see is, silver and gold are going nowhere. So therefore, I'm wrong about everything. Well, I'm not. That's their perception.
People get very impatient as well. And I always get incredibly excited when we're at the point where everyone's depressed and people are jumping off of buildings and, everyone's going, oh, this is the end. And that's when it's usually time, in my opinion, to sell your shirt. But I wanted to ask, and by the way, Frederick Bastiat, the first.
Frederick, yes, thank you.
How long do you think the monetary system and markets can sustain themselves going forward, and what is your plan for when they do go down? Because of course you hear a million times from countless people, you guys have been saying it's going to crash for years, and of course people have been right for years in saying that because it's an inevitability. Every fiat currency does crash, as you mentioned earlier on in the video, and it's a correct statement to say so. It's incorrect to say on this date it's going to happen, because that is where you lose credit and it just makes you look bad, and no one can really say it's going to happen on that date, as the fundamentals have basically been completely wiped off the table. But I wanted to ask your plan when the inevitable does happen, what you are personally preparing for, and how you're going to go about it.
Well, that's, looking, my crystal ball broke, so I really don't know. But I will certainly, stab a guess at your question. I mean, usually when one market is very overbought and very overpriced or overvalued, there's usually another asset class that's undervalued and underpriced and underloved. So I suspect that in the metals markets, when it gets overvalued, that you're going to look at maybe raw land. That's a possibility. I don't know, but that's an example. So it could be, I'm not so sure real estate, improved properties will be low. I don't know, but there could be an asset class. Maybe it's biotech. I don't know. There could be, and it most likely will be, someplace to put your money. Now, what concerns me the most, Josh, is when we get to that top or near the top, I want to sell in the strength and I want to leave some for the next guy. I don't want to get the very top.
Yeah.
I want to sell into a very strong market where it's still got another, week, 2 weeks, or a month or two to go. And everybody's still making more money than I did, because I sold my silver at $127 and now it's $190. Okay. I didn't get the top, but I got my cash. What worries me is if we cash out and that cash becomes worthless. So my plan right now, subject to change, is to sell the paper for paper. In other words, move the stock portfolio into cash and then have a plan to move that cash into a real asset of some type. Like I just said, maybe raw land, maybe real estate, maybe something in the stock market. I don't know, maybe cryptos. I don't know, but somewhere. And hold the metal. as a precaution, maybe lighten up on it. Depends on the position. I'll be writing for my members and probably do some in the public about the plan. But what you don't want to do is watch silver go to $100 and watch it come all the way back down to 50 where you got in or something. You don't want to do a round trip. You definitely want to take a profit. Now, are you going to take that profit in fiat? Maybe, probably. I don't know. You may be in a situation where the reset happens and maybe they put gold back into the monetary system at a cursory level where it's gold, oil, and who knows what. And that's the new globo, the new global currency. I don't know. There's so many factors, and I've thought about many of them, but no one knows the answer. At least I don't think anyone does. I don't think the bankers know the answer. So we got to be nimble. We got to be awake. We got to critically think. We got to be aware of there's a lot of possibilities and think through them clearly. And one of the best things to do is what we talked about at the beginning of the interview, and that is, diversify. Don't make that decision. Oh, okay, I'm going to go into this crypto with all of my silver profits. No. Put your toe in there. So I'll be guiding.
Wait. What about BitConnect 2.0?
Yeah, right.
Get in 100%.
Yeah.
I mean, what you're saying is very reminiscent to, what most people have been saying in the sense that everyone should have an exit plan, obviously, and to diversify and not to put all your eggs in one basket. And it goes without saying, going into the future, that everything comes to an end, and it's important to hedge your bets and be able to ensure that you're sustainable. I think the most important thing that everyone should always consider is just being responsible and educated, understanding the markets as much as you humanly can, even if they are fluctuating and crazy and it's impossible to really wrap your head around every single trend. Nonetheless, I think people should obviously be responsible and try and understand it, because people seem to forget that money is one of the most important things to understand. However boring people might think it is in some cases, it's one of the most important things to understand, because if you have control of your money, you have control over your own life and your livelihood. If you don't have control over your money, then, well, someone else does, and maybe you might want to look into that. But again, it's very insightful hearing your thoughts on all these issues, and all of this will be spoken about in depth as well among many speakers at the Red Pill Expo 2019 in Hartford, Connecticut. That is June 7th to 9th. It's a couple weeks away, and I hope everyone checks the link below for that. But I wanted to finish this off, David, by talking a little bit about the Red Pill Expo, because I've seen you there before, and it's a very entertaining and educated event. You get a whole host of different quote-unquote red pills, everyone from yourself to Robert Kiyosaki to G. Edward Griffin, and then all these different subject matters that allow us to kind of look at or view all these ideas from all these different angles, because we all have these red pills to give, and we all have swallowed blue pills as well that we need to, get woken up on, so to say. So can you talk a little bit about why you're going to the Red Pill Expo this year, and why you're excited to see everyone out in Hartford, Connecticut this June?
Well, as you know, Josh, I was a vendor. I put up a booth at the Spokane event and was not a speaker.
Mm-hmm.
And this year, Ed asked me if I would speak. And it was only after meeting the load team at Acapulco and understanding that I'm one of the ambassadors for the silver-backed cryptocurrency, reinstituting silver as money, basically.
Mm-hmm.
And he caught the idea really quickly. And after talking to some of the let's say founders of the program, said, geez, that's a red pill, take it on. So
yeah.
I'll be speaking about that primarily. As far as a broader base, having been, this will be my second one. I didn't do the first one in Montana, and I think there's one other one before the Spokane one. But regardless, I was blown away because, I am pretty far down many rabbit holes and have been doing so since I was basically a kid, 16, 17, I got interested in this stuff way before the internet. So it was a little harder to dig out information and do real research, but regardless, I did it. And what I learned, like on the healthcare system, just blew me away. I knew some things about it, but those two women that did the healthcare presentations were like, this is so awesome, because here's what the law really says. And here's a real answer you could give to filling out this form and those type of things. Because the better educated we are within the law, be calm, be cool, be collected, don't get confrontational. But most of these let's say, bureaucratic types or employees. They're just taught to follow what they're told. They don't know the real depth of a lot of this stuff. And so the red pill is the red pill. I mean, what can I say? Is. It teaches in many areas a lot that I'm not that, educated in. And I'm always willing to learn. I love to learn. I love to learn more. I love to learn the truth. So there was a lot more ability to question the healthcare system in the U.S. if you know how to do it. So that was one that was a real eye-opener for me, Josh. And I just used that to go on to, let's say, the organized religion and, health. I mean, I picked up a supplement, and I'm a big supplement guy. I did triathlons in my 50s. I still lift weights, still stay in pretty good shape. You know me fairly well. Mm-hmm. And I'm kind of a supplement nut, but most of them are junk in my personal view. But there was one there at the Red Pill. Got to talking to the guy, the inventor's son, gave me a sample, took it, and I've been on it ever since. It's one that Ed uses too, by the way.
Yeah.
So, it's health, it's wealth, it's everything. So I don't want to build it up too much, but I've been to a lot of conferences. And as far as I'm concerned, the Red Pill is the one. If you're going to choose one to go to, it's the one you should go to. Why do I say that? Because it's not finance only. It covers basically everything that you have questioned out there, from, what's going on in the skies to what's going on in the water, what's going on in the healthcare, what's going on with education. I mean, man, so I could just go on and on and on, yeah. But you are getting your money's worth when you go to a Red Pill conference. I guarantee it.
Yeah, and I certainly think, your health is one of your greatest forms of insurance. And looking at someone like Mr. G. Edward Griffin, who's 88 years old, and I still see him climbing ladders and setting up chairs and tables and running around. He literally, I went to his retreat not that long ago in December, and he was literally climbing a mountain. So, I mean, that's an 88-year-old man. If he's got something, or if he's taking a supplement, it's probably something you should be taking, and it's probably something you should learn about. But anyway, there's so much to learn there. I'm looking forward to it. Everyone can check the link below. It's about time that you spoke there. I'm looking forward to your presentation and your talk. And it's always very enlightening to have all these different angles to look at all the world around us. It's not just money. It's not just health. It's not just, culture and media and schooling. It's all of these things together. And it really adds up once you try and understand it. It paints you a picture of the world that you just weren't aware of. And if you think that you know everything, Red Pill Expo will tell you that no, you certainly do not, and there's a lot more you can stand to learn. So I think it's going to be a great time. I'm looking forward to seeing you there. And as we wrap this up, can you tell everyone where they can find more of your work and support the work that you do?
Sure. The best place is just our main landing page, which is themorganreport.com. Be sure to look at the blog on at least a weekly basis. I do have a YouTube channel. Just type in the Morgan Report in YouTube. I'm on Twitter at SilverGuru22. Don't have much of a Facebook presence, but YouTube and Twitter, pretty well done. And the blog is probably the best place, but the best thing you can do is get on our free email list. Just go to themorganreport.com and sign up.
Absolutely. Well, I really appreciate you joining us as per usual. We will be seeing you, I guess, in a few weeks at the Red Pill Expo, and maybe we'll talk again then. And looking forward to it. And thanks again.
My pleasure, Josh. Thank you.
Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.
Bye.